Hey everybody, welcome back to Fly Kiwi. So after the New Zealand Reserve Bank, or the Reserve Bank of New Zealand, they cut the interest rates by 50 basis points or half a percentage point from a 4.25% down to 3.75%. The banks in New Zealand have moved down. So we've got here the rate sheet here on interest.co.nz, and we can see that the ANZ has moved a lot of their rates. The standard floating rate now is 6.89%. 6 months is 6.49%. The 1 year is 5.89%, and the 2 years is 5.59%. That is the lowest one there, 2 years. So really competing in that space, right? We know that a lot of people have been holding off because they knew the central bank or the Reserve Bank of New Zealand was going to lower interest rates, and therefore been either holding floating or doing 6-month rates. And of course, now we're starting to see the benefit there. So that's where we are there at the moment. ASB is also down at 6.89%. Remember, that was up at 7.39%. So that's down to 6.89% there. And it's still got pretty similar rates there. So still sitting on the 1 year at 5.49% and 5.29% on the 2 year. Pretty good 2 year rate now, isn't it? Considering that we've got 3.75% there. So that's that's a 1.5% difference there. So not too bad. Now with 3.75, you can still see the floating rate still pretty high there at the moment compared to that wholesale rate. So definitely fixed rates pretty attractive. BNZ is a standard rate is down at 6.94%, slightly higher than ANZ and ASB, which are pretty much the same. The 1 year there is at 5.89, pretty much the same. Sorry, 6 months, 5.89, pretty much the same as ANZ and ASB. The 1 year 5.55% is higher than both ANZ, or at least it's higher than ASB, but actually below ANZ's standard rate. So that's the second most competitive for 1 year. Moving to 2 years, we've got 5.29%, pretty much matching ASB and competition there. So it's rates about to get still getting friendly. Kind of cool to see that. Now moving further down, we're going to pass some of these other banks, but let's go to the Cooperative Bank. We've got 6.49% there at the moment. And of course, that compares to 6.89% there. And there may be some conditions tied to that. We're looking at the 6 month 5.99%. If we compare that to the BNZ 5.89 to 5.5, so we're 5.99 there, 5.59 and 5.49 there for the 2 year rate. So still quite a bit higher there than the other ASB and ANZ, for example. Heartland Banks down to 6.49% on the floating there as well on standard rate. What else we got going here? We've got Kiwi Bank 6.75%. That is the one that's been changed. You can see it's in dark there, 6.7, so which is below the ASB 6.89. So not bad rate there for Kiwi Bank 6.75. And the other rates are obviously pretty high as well. Actually, not too different, are they, from Kiwi Bank standard? What else we got going on here? Westpac 6.99% with 6.59%. So they've changed their floating rate 6.99%. So that's definitely higher than some of the others above their ANZ and ASB. The 12 month is down at 6.09%. So 6.09% compares to ASB at 5.49, etc. So there may be some terms, or maybe being their customer for a while as well. So just remember that sometimes there can be slightly differences there. But the standard rate 6.09 for 12 months, 5.89 there for 2 years. So 6.09. How does that compare? Well, that's 6.09 higher than these rates for ASB. So ASB, BNZ, pretty competitive in that space, but also on some of the floating rates, some of the other banks may be pretty competitive too, like Kiwi Bank. So interesting stuff there. That is what's happening with those. Now we've got a little bit of commentary here as well. ANZ said it would cut floating rates, and it's done that. Also cut its fixed rates between 10 basis points for 6 monthly, so it's done some of that already. The managing director said that borrowers could potentially see 100 basis points or more coming off their home loan rates when they refix, I should say. So that's very good news. Westpac had cut its 1 year rate. We talked about that. They said that we're seeing growing confidence amongst household and businesses about the year ahead, and today's rate cut will give homeowners a further boost and help put more money back in their pockets, which is obviously a big deal, especially with some of the mortgages in New Zealand, how high the house prices are, even though they've sort of tapered off a little bit. We're seeing growing confidence amongst household businesses about the year ahead. That's pretty interesting. We still see relatively high confidence amongst business, retail, and farmers, but I still question whether that's going to hold up given all the other gloom data at the moment. Now, the question is, with the low interest rates, will people take out more loans and go and spend more? That's the other thing as well, right? Get a new car or do an upgrade or something like that. Now, Kiwi Bank said it was passing on the full OCR, so that was good news there. We looked at that, the 6.75. ASB also passed on the full reduction of floating borrowing, taking its variable rate to 6.89. That's good news. Executive General Manager Adam Boyd said the bank had reduced its variable rates by nearly 2% in the past 6 months. ASB would also reduce some of its saves. Now, the good news about this is we actually saw them moving fast, right? Now, you can question some of the fixed rate numbers, but passing through the full floating rate, that is pretty good news. BNZ says it was reducing its floating rates as well, and of course we've just looked at all those, so pretty cool. Now, you're going to get some different opinions about where the interest rates would go. They have one commentator here, chief forecaster for Infometrics, Gareth Kernan there, said that as a result, I expect to see some more downward pressure on fixed mortgage rates up to 2 years, with further falls of up to 25 basis points possible in the next couple of weeks. So he's expecting a bit more competition in that fixed rate there. So maybe you hold off for that or not. The bank is starting to run the risk. He's talking about central bank of overshooting again on the way down, as it's done on both the trough and peak of the cycle. In other words, there are very aggressive interest rates for the Reserve Bank of New Zealand on the way up, and he's saying, are they going to be too aggressive on the way down? So that's kind of his point there, and he kind of sees that maybe they've downplaced the increased risk of inflation that had become evident. And I think there's still a lot of inflation around utilities and rates and things like that. And particularly power and stuff like that. But I think there's probably a bit more tapering of inflation around imported inflation in particular. So maybe domestic inflation is still relatively high. Imported inflation maybe not so bad, especially with the Trump era coming. And Trump did it in the first term, and he's going to, I think, got even a better plan for this term in the next 4 years. So I think that's going to be pretty good for oil prices, and therefore even with a weaker exchange rate, it's going to be beneficial to lower prices for imported inflation. And of course, people have to drive, right? People have to drive, and of course, oil is used in about 9% of products in a modern society, so they're going to be pretty important there. So that was some interesting stuff there. His comment also for property market and mortgage borrowers. Then the key message is that any further interest rate cuts are set to be smaller or slower than they've seen to date, especially since banks were already cutting in advance. So people might want to make a decision today on going fixed or wait out a little bit more and maybe get a little bit lower rates there, but you're still paying that floating rate, right? So that's some of the key aspects there. Finance Mortgage Advisors Association sent out a message to borrowers who do not see a reduction in their repayments to contact your lender and ask why. If you don't get satisfaction, see your mortgage advisor, which is always a good thing to do. But also always ask questions. Don't just take what they say at face value, and look for options as well, and put a bit of pressure on them, on the bank there, to give you the best rates. So pretty cool. Now it's got here, some lenders are already factoring in into their rates, with a few headline rates coming out from Westpac of 4.99% for 3-year fixed. TSB moving yesterday to a 2-year fixed of 5.29%. So definitely hunt around. And like I say, interest.co.nz has all those rates there as well. So you can definitely check that out. Hey guys, I hope you guys have enjoyed this live stream. Great news here. The OCR, good news, and New Zealand cutting rates. Reserve Bank, retail banks cutting rates. That's great for the Kiwis, and maybe help to give a lot of relief, which has been a pretty tough time out there. All right, take care. Bye for now.